Well, I think we can get started. My name is Dora Coop, and I want to welcome you to this webinar on cybersecurity on behalf of the Quebec branch of the Chartered Governance Institute of Canada, so CGI Canada. It's an organization for governance professionals in Canada, and as such is committed to strengthening and advancing good governance and the efficient administration of organizations in Canada. And I want to just note that this year we are celebrating our 100th anniversary, so a long history of doing good work in governance. Unique to governance organizations in Canada, we are part of an international network that supports over 29,000 members living and working in over 80 countries. The Chartered Governance Institute is the only international organization that can offer a qualification that empowers a person with skills that transcend borders. Here in Canada, we offer 2 programs for certification, and you can find out more information about this on the web or contact Patricia Thacker, who's the Executive Director. She can wave. She's Executive Director of CGI, and she's on the call, and she'll be very able to answer any questions you have. The programs are the Chartered Secretaries Qualifying Scheme, and it's a globally recognized and intensive program with standards set by the international body. And we also have the Director Education and Accreditation Program, which we call DEEP. It's a 3-day intensive program focused on providing board directors and governance professionals with the skills that you need to perform your roles effectively. DEEP offers knowledge in the areas of governance, financial reporting, disclosure, risk management, and strategy. And of course, there's ongoing continuing webinars such as the one being run today. Today, it's the Quebec branch that is hosting this, but other branches also run them. And given the fact that we are doing things by Zoom today, it means that you can take advantage of these webinars across the country. So I won't take up much more time about us, but I want to talk and introduce the 2 speakers for today. Paul Dubay has 25 years of corporate secretarial, corporate governance, and regulatory experience, both in-house and as a professional services consultant in the UK, Canada, and the Caribbean. He has worked with a diverse range of boards and senior management teams on governance matters, and recently completed a 2-year assignment as head of corporate governance at the First Abu Dhabi Bank, the largest bank in the Gulf region. He now runs his own firm, Perfect Balance Consulting, and it provides coaching, consulting, and training for the next generation of leaders. And I just want to point out that he also teaches on the DEP program. Camilo Barato is the corporate director of insurance at Kruger Inc. And in this role, he's responsible for managing and overseeing the corporate insurance programs of Kruger and each of its subsidiaries. He worked for a number of years at Saputo in risk management, and given today's topic, is well versed in what companies must do to manage and protect themselves as much as possible from risks such as cybersecurity. So given the background of these 2 speakers, I'm sure we will leave this session with a better awareness of both the risks we all face and also some measures we can use to protect our organizations and ourselves. So over to you, Paul.
Thank you very much, Dora, for that wonderful introduction. And I just want to start with a few housekeeping rules, actually. First of all, just in terms of the Zoom platform, I'll just ask everyone to, if you could mute yourselves, and also just if you could turn off your video screens so that just myself and Camilo as speakers, in order to maximize the screen and the slides that I'll be sharing with you. And with that, I'm just going to share my screen now, and hopefully everyone can, when I share the screen, hopefully everyone can see the slides. And so I'm assuming that everyone can see that. And cybersecurity, the monster under the bed. So cybersecurity is considered as one of the greatest threats to any organization, large or small. It's not a case of if your organization is targeted, but when. And when it does happen, questions will inevitably be asked about the extent of the oversight by the board. The pace of technological change far outweighs the speed of the evolution of governance, or even the ability of regulators to regulate. And just like the pandemic, cyber attacks are an unseen enemy. Lurking in the shadows are cyber criminals and hackers planning an attack on your organization. You don't know when that's going to happen, where or how, but they do. So this webinar is going to explore some facts around cybersecurity that demonstrates how it's changing the risk profile for boards. And we're briefly going to be looking at some high profile cybersecurity cases and what went wrong. And we'll provide an overview of directors' duties and suggestions on some of the governance actions that a board can implement to mitigate the risk, as well as an overview of some of the questions, the key questions that the board should be asking management. And we'll also be looking at the critical role of ensuring cyber risk as well, what's covered, what isn't, and what to look for in a cyber risk policy. Now, while this webinar comes with a health warning, it will also provide some tools to help you ensure that your organisation prevents a terminal illness. Of course, like any webinar that lasts an hour or so, we can really only scratch the surface, and it comes with the caveat that this free webinar is not intended to be legal advice and shouldn't be construed as such. So any action that you take as a result of attending this webinar is purely your responsibility, and we accept no responsibility or liability that might occur directly or indirectly as a consequence of the use, application or reliance on this seminar. There we are, there's the legal stuff out of the way. So let me tell you a little bit about myself, and Dora gave me a lovely introduction. Thank you very much for that, Dora. Just, you know, on the point around governance, really, I think one of the key things for me is that in my experience, boards are rarely prepared for technology governance. They're just not geared up for it. They don't have the expertise on the board. And that's been recurring in my career. I've seen it so many times. And it's more acute than ever today because of the pace of technology governance. So, you know, that's one thing I think that we all need to, as governance professionals, we need to be able to address. Camillo, do you want to say a few words as well?
Sure. Thank you, Paul, and Dora, thank you for that lovely introduction as well. And once again, everybody, Camilo Barato, a risk manager at Kruger. As you might know us recently because of is that time of the year where we put out a Scotties tissue and we use those quite a bit. So, and Dora also mentioned I was part of a dairy producer in Canada previous to my role. The boards tend to be quite knowledgeable of the regular risks that each individual corporation faces, but cyber is or was an emerging risk, and it's considered now a well-established one. And it's important for us to go through this session so we can give more flavor to the risk itself, and then the risk financing solutions that may be available. And to educate everybody, I'm here to provide everybody that flavor after Paul gives us a really good introduction to the topic. Thank you, Paul.
Thanks very much, Camillo. Thank you. So we hope you enjoy the session, and as a governance professional, get some useful ideas that will stimulate your thinking. And feel free to put in any ideas and thoughts in the chat function. We will leave some time for questions at the end as well. So let's dive right into the session. And first of all, then, our agenda today. We've got a packed agenda to get through. This is today's agenda. We'll be starting off with some astonishing key facts around cybersecurity and also provide information about the risk profile of cyber threats. We'll analyse the types of cyber risk that an organisation faces. As I say, we'll be looking at some high-profile cases as well, where the organisation has got it badly wrong, which alone should serve as a wake-up call for organisations that think it can't happen to them. And we'll be assessing the potential damage to a company and where the attacks might likely come from. And importantly, of course, we're going to be assessing the potential liability for directors, recognising that there will always be technical challenges for the board. So having scared the heck out of everyone, we'll then look at what the board can do to mitigate this threat, including tips for education and also questions, as I mentioned before, that boards can ask if they're not technical experts. And then, of course, talking about the emerging insurance provisions related to cybersecurity. So a lot to get through. Let's look at the key facts, first of all, around 10 key facts around cybersecurity.
Paul,
I'm not going to read all of them.
Interrupt, Paul. But just on the agenda, we've been asked from Alberta, because we're covering different time zones, if we could have a 2-minute pause in there at 11 o'clock.
Oh, right, okay.
I didn't realize that. So I'm just putting it now on the agenda.
So does that mean 1 o'clock for us, Dora, a 2-minute pause?
Yes, it does.
Yes, of course, absolutely. For Remembrance Day, you mean? Yes, yes. Absolutely happy to do that. And thanks for the reminder.
Excuse me, Paul, can I just interrupt? I'm sorry, there's somebody that just emailed me. They're in the waiting room. Do you have any attendees you can let in?
I don't have any notes of any people having entered the waiting room, Dora.
Oh,
okay. Let me just, I will just come on and, oh, actually, there's a few people here. My apologize. Yeah. Okay, I hopefully now have admitted everyone to the meeting. Okay, all right, so just some security, some facts around cyber security then that wanted to highlight. So, sorry, let's just move back to the first group. So if you can see here, the worldwide information security market, 170 billion, 62% of businesses experienced phishing and social engineering attacks in 2018. And 68% of businesses feel their cybersecurity risks are increasing. Now, if you look at some of these facts, and I'm just going to move to the next set of facts as well, just for you to highlight or to look at some of those key facts, very astonishing facts. One of the key things that resonated with me when I was doing my research on this is that the average cost of a data breach is around 3.68 million. That's one data breach. So I think suffice to say that it provides compelling evidence that whilst cybersecurity may be a relatively new and emerging governance issue, it's also one that boards need to pay great attention to. So if I were to summarize the 10 key facts, let me just come out of that, just bear with me. If I were to summarize those 10 key facts, I would conclude that cybersecurity attacks are increasing, including the range and level of attacks. The financial costs will continue to escalate and organizations will become more and more valuable as well. Can everyone see my screen okay? So I just wanted to make sure that everyone is seeing the screen.
Yes, we can.
Okay, perfect, that's good. So just on these points as well, I did come across the 2020 Canadian Internet Regulatory Authority report on cybersecurity. And this makes alarming reading. As a result of the pandemic, fewer organizations are dedicating human resources to cybersecurity, less than 1/3. And about 3 in 10 organizations have seen a spike in the volume of attacks during the pandemic. And even more worryingly, organizations are less likely than in 2019 to inform a regulatory body of a data breach, 36% compared to 58% last year. So at the same time, directors recognize that they do not necessarily have the technical expertise to provide sufficient oversight, and either don't know what their organization's arrangements are, or if they do, how to scrutinize them to ensure that they're fit for purpose. And so, you know, cybersecurity is truly the monster under the bed, and you should carry a healthy fear of the implications for your organization. This Aon survey of the largest risks that apply to an organization. This was a survey done of CFOs, CEOs, and various senior management around and directors around what are the key risks for the organization. Now, geographically, participants in North America see cyber attacks and data breach as a #1 threat. So according to Symantec, an American software company, the US was the country most vulnerable to cyber attacks, the largest attacks against American companies between 2015 and 2017, with around 303 known large-scale attacks. At the same time, a 2018 survey by the World Economic Forum also showed that cyber attack was considered the #1 concern by businesses in the US and Canada. It was only in 2015 that cyber risk actually entered the top 10, although even at the time, damage to brand and reputation was cited as the top overall concern facing global organizations. Now, cyber risk has been regularly linked to brand and reputation issues in the wake of data breaches. However, the concern around cyber risk is not just around reputation, it's also around business interruption, property damage, and failure to innovate. So we'll be talking about the damage that cyber risk causes in more detail shortly. So let's look at some of the types of cyber attacks. These are just a few of the samples of cyber attacks. There are many other types of attacks, for example, phishing attacks and access through passwords or social engineering, commonly when it may be an inside job as well. Now, the purpose of the attack may dictate the type of cyber attack that is initiated. For example, the insertion of malware may be for the purpose of industrial espionage or to control the system in order to create damage, such as system crashes. Another reason may be to steal data, which can happen through the exploitation of configuration weaknesses to gain unauthorized access, such as through the insecure API, the application programming interface. Now, this is often an incentive for hackers, as we'll see in the case studies, in order to sell the data for financial gain. And of course, for activists as well, the reason for attacking may be to embarrass the company or to bring widespread attention to the company's activities, which, for example, may offend the moral compass of the hacktivist. Often the case in controversial industries such as animal experimentation, and also highlighted in one case that we'll look at, which is Ashley Madison. So further types of cyber attacks, there may also be revenge attacks, for example, from disgruntled employees. And these insider threats can consist of such activities as inserting Trojan viruses for stealing sensitive data. Now, the inside knowledge can be through unauthorized use of authorized access, such as passwords. And of course, as you know, one of the first things that organizations do when they separate an employee is to remove their system access. Now, one of the most damaging cyber attacks is the distributed denial of service attack, which can be devastating for an organization when a website is made unavailable for long periods of time, particularly when they are commercial sites. For example, in 2019, the Baltimore municipality website was a target of a ransomware attack, which disabled the computer systems, which took the servers offline. And this meant that such services as paying your parking ticket and property transactions were prevented from occurring and was conducted largely to cause political embarrassment. So the attack cost Baltimore $18 million. And some commentators have actually described DDoS attacks as more powerful than nuclear missiles. Interesting point. So let's look at some of these key case studies. And some of these may be familiar to you. Target in 2013. 40 million Target credit cards were stolen by accessing data on point of sale, the data around those credit cards. Target missed internal alerts. They only found out through the Department of Justice that they had been hacked, and the hackers got access to 11 gig of data. And the extent of the damage to the company, well, of course, the CEO and the Chief Information Officer lost their jobs, 140 plus lawsuits filed against Target, Profits dropped precipitously as well in the fourth quarter, just immediately after the attack. And so some of the key failures by the company, well, again, you know, ignoring alerts. They had these alerts, they just didn't appreciate the significance of them. And baseline compliance is just not enough, and that was demonstrated here. You have to consider all of the assets, all of the company's digital assets. And so you need several layers of defense, and we'll be talking about how we can do that later as well. And what was the board involvement here? Well, of course, the board were threatened with threatened with removal, and also charged with breach of fiduciary care. Then we move on to a very controversial case of Ashley Madison. And again, a group here calling themselves the Impact Team stole over 60 gigabytes of company data from Ashley Madison. And they threatened to leak it if Ashley Madison didn't shut the website down. And again, looking at the extent of the damage to the company, they lost their CEO. There was a large, huge class action lawsuit. And of course, you also have to remember the social impact here as well. And unfortunately, in this case, there was 2 suicides as a direct result of the attack. And so, again, key failures by the company. They really didn't have in place a proper encryption strategy to protect the passwords of their clients. So it was very easy to crack the passwords. And again, the board involvement, they really, to some extent, turned a blind eye to some of the nefarious practices that the company was engaged in this case, using female bot accounts to encourage men to sign up for a paid premium account.
Excuse me, Paul, it's Kathleen. Sorry, can I interrupt? Wisdom is waiting in the guest room there to be attended. So.
Oh, okay, right. Okay,
Perfect.
let's just have a look. Did you say there was one entrant, Kathleen?
Wisdom.
Okay.
For sure.
I'm just not seeing anyone in my system at the moment. I'll just press on until I get a message, if that's okay with everyone. I can't see. Let's have a look. Just bear with me 1 second.
Sure.
Okay, Kathleen, could you send a message to Wisdom just to ask to sign out and try and get back in again, because I'm not receiving any message for him to enter the meeting.
Okay, will do.
Thank you. Okay, so the next case study, Equifax. So now Equifax was using a third-party open source web application called Apache Struts, but they hadn't updated their servers. And so there was a security exploit here, and all of the users were told to update their servers, but Equifax failed to do so, with the result that over 160 million people in America and Britain were affected by the breach. And again, often as what happens here is that the shares dropped, a huge amount after the breach was made public. There was various settlements as a result of lawsuits and regulatory fines. And so when you look at the key failures by the board around and by the company as well around this, the failure to update their system and an insecure network design, and they didn't actually detect the breach for 76 days as well. This is an alarming thing as well, that they were able to get inside and not actually be detected as well. And so, of course, what happens here? We lose the CEO. And again, the board failed to really set expectations of the senior team as to what should be done in the organization. So you have to look at the levers of management. And did the board truly understand? Did they set proper expectations? Now, I've highlighted in these slides 3 of the most high-profile cases. And all of them resulted in huge financial, reputational and product damage to the respective organizations, as well as the adverse social impacts caused to the victims of the data breach. So in all 3 cases, these high profile failures prompt a common question, which is, where was the board? For example, in the case of Target, as I mentioned, they were actually charged with breach of fiduciary care. So I think to summarize here, the boards and senior executives know that technology is essential to the future of their organizations. However, too few have stepped up to competently lead and govern the digital transformation that's required to remain relevant and competitive going forward. And, you know, technology is rapidly becoming one of the largest areas of corporate expenditure. And many boards continue to delegate or ignore their role in technology governance. Organizations have failed to provide sufficient oversight of emerging trends in technology, have gone out of business or lost significant market value because they've just failed to keep up. You know, such organizations once considered technology leaders have lost relevance. For example, some of the ones I listed, thought about was Kodak, EMI, Nortel, Barnes & Noble, HMV, Sony, Sears, and AOL, and I'm sure you could probably name plenty of others as well. So when we look at the organizational damage, well, of course, the costs both tangible and intangible to, I've got Wisdom here, so I can admit Wisdom to the room. There we go. Okay, so so the costs to an organization are almost immeasurable. I mean, we've already highlighted that the average cost of a data breach is around $4 million US. However, the financial cost to some extent is the tip of the iceberg. The damage to reputation is far greater and harder to define. There's also the long-term cost of the business as well. As we saw with Target, the profits halved in the quarter immediately following the data breach. And so you could probably categorize the costs in the following manner. So there's the direct theft of intellectual property and the extortion attempts related to that. For example, the hacktivists in the case of Ashley Madison threatening to reveal the sensitive data. Then, of course, there's the direct cost of mounting a response to these attacks, repairing the defense systems, and of course, the copious management time spent in deciding how to respond, how to develop a communication strategy, if indeed you have one. And of course, there's the costs of the slowdown in the adoption of innovative technologies and the destruction of competitive advantage and future growth. And that continues, of course, with the regulatory fines, the ongoing costs of regulatory investigations, and of course, the likelihood of litigation, which in this case, in Equifax case, I should say, was a huge class action lawsuit. Then, of course, the impact of a precipitous drop in the share price, the resulting loss of market capitalization, and that can destroy an organization's competitive advantage. And then, of course, the impact of on reputation. Now, we talked about that being intangible, and it isn't as easily seen, but customers and suppliers suddenly no longer trust you, and competitors will seek to exploit your weaknesses to gain market share, and your product may no longer be seen as innovative. So there's often a cost associated with the lack of faith in management as well, because in all three of the cases that we looked at, the CEO was forced to step down and the board came under fire. And that's not uncommon in the case of data breaches. And of course, the impact on insurance premiums is also something that Camilo will be talking about shortly. Okay, I think we've just got Kathleen. Do we have time before our 2 minutes just to move to the next slide, or should we now take 2 minutes silence?
Go ahead.
Okay. I'll just ask you, Kathleen, if you can just stop me when we reach the 2 minutes silence, if you could, please.
Okay.
Thank you very much. So here, talking about sources of cyber attacks, well, we all know about rogue states and disgruntled employees, as well as hacktivists who believe that their attacks are morally justified, or indeed the terrorists who operate for more nefarious gain. Now, the potential sources of cyber attacks are far and wide. However, research by Business to Business International suggests that up to 40% of cyber attacks, such as the distributed denial of service, the DDoS attacks, is believed by the victim company to be the result of attacks by competitors. And this is even higher than cyber criminals, which accounts for 38%. So industrial sabotage is considered to be the most likely reason behind the DDoS attack, coming out higher than political conspiracy and personal vendettas against a business.
Okay, it's now 1 o'clock here.
Thank you. I'll
2-minute silence.
be silent for 2 minutes. Thank you.
Okay, thank you, Paul.
Thanks very much, Kathleen. So thanks everyone for observing the 2 minutes silence. So one of the things that I think is very, very apparent here is that the sophistication of cybercrime has grown beyond phishing scams to include municipalities, major companies being held for ransom. And so even these sort of larger scale bodies are not adequately trained or prepared to deal with this sort of increase in level of crime. And I just wanted to highlight that one of the more recent sources of cyber attacks as well comes from the Internet of Things devices that are now everywhere in the workplace. Each device is a potential security risk, particularly when they're so interconnected. And few companies really manage or even inventory all of their IoT devices. For example, as they become increasingly used in industrial systems, there's also an increased risk of IoT infections that can disrupt manufacturing processes or other critical business operations. And so these vulnerable devices can open the door to more disruptive threats such as the botnets and the DDoS attacks and so on. So they're fruitful sources of introducing malware into systems that spread throughout the computer network due to their interconnectedness. So many areas that potential sources of cyber attacks. So I just wanted to highlight this case here, a very high profile Delaware case, a landmark decision that really established that directors owe a fiduciary duty to act in good faith to assure that a corporate information reporting system that the board concludes is adequate actually does exist. Now, some of you will be familiar with the case. I'm not going to go through the details here, but it was a derivative action. It's first of all, of course, what we need to understand is that this is a US case, a Delaware case. It's not directly applicable in Canada. But it's interesting just to understand, you know, it being a derivative action brought by shareholders who alleged that the directors had breached their duty of care. And as a result, the company was able to commit a number of criminal offences that the board failed to oversee. But, you know, the judge did qualify that whilst the directors have this duty, the standard is relatively low. In other words, that they have to have established an utter lack of good faith in order for it to be a necessary condition of liability. And so that's a high benchmark in the sense that on the face of it, a director would be relatively safe if they've acted in good faith with some degree of competence. But I think the important principle here is that as a director, you can't just turn a blind eye and expect management to have it covered. So whilst it's not directly applicable in Canada, cybersecurity risk and technology governance is still one of the biggest oversight challenges facing board directors, and it does carry a degree of personal risk as well. And there have been cases where shareholders have brought claims against directors in high-profile data breaches. And so although the majority of those cases have not been successful, it's likely that, you know, potential derivative shareholder litigation will continue, and class action suits will likely continue as well. And in addition, there's also the European Directive, which is a general data protection regulations, a GDPR, which some of you will be familiar with, which is generally around breaches relating to privacy data. And in fact, Google was fined 50 million euros in January 2019 by the French Data Protection Authority for violations of the GDPR. So it just adds further potential for regulatory fines and sanctions, and it adds further scrutiny to the role of directors and whether they could have prevented these data breaches without, you know, through the proper oversight. And so the SEC is policing cybersecurity reports in the US and the disclosures that they make in financial reports. And so, although my research suggests that board directors are more involved with cybersecurity than ever before, the level of focus must continue to improve, particularly as a business risk from cybersecurity has raised the stakes for board directors and officers. And so, in my view, the board needs to set a strong tone at the top to drive the organization's policies and procedures. And so when we look at some of the technology and knowledge challenges for the board, you know, I've highlighted some of the issues here. And of course, this applies to any organization, whether they're a small or large organization, whether they're a not-for-profit or a public corporation. I think all organizations are grappling with some of the issues here for the board. And part of the problem, I think, is the demographic of traditional boards. They tend to be older and perhaps less engaged with the exponential rate of change of technology. And it's only relatively recently that technology has become such an issue that's central to the strategy of an organization and pivotal to its risk profile. You know, as a result, a typical board agenda may not even have any oversight of technology or cybersecurity, and the chief technology officer may not even have direct access to the board. So worldwide, directors vary significantly in their governance oversight, their personal competency and collective capability, and digital leadership. So this skill shortage often results in boards sort of delegating the oversight responsibilities and moving off to another committee, and they don't understand the information, even if they are in an oversight role. They don't always understand the information presented by management. And of course, they don't have the expertise to ask the right questions. So given the technology and knowledge challenges for the board, what can we do to prevent, as an organization, to prevent a cybersecurity attack, or to mitigate one if the damage, if one occurs? So I've put some suggested actions here, which is in no way definitive. I mean, there needs to be an attitude shift so that the board recognizes the vital strategic importance of their technology framework, that they're not just a cost center, that they're so vital to strategy. That means making the resources available to properly fund the technology framework, including, of course, the cybersecurity defenses. And the board also needs to take a more active oversight role, possibly through the creation of a separate board level IT committee, or in any case, there should be unfettered access to, for the chief technology officer or chief information officer or equivalent, directly to the board, because the reporting required by them should include regular reports on the cybersecurity risk and the results of regular vulnerability assessments. It's akin, I look at it akin to stress testing for financial organizations. The reporting should also include an analysis of emerging threats as well. What's coming down the tracks and what has the organization planned in order to address those emerging risks? So the cybersecurity scenario should be an important part also of the organization's business continuity plan. I just wanted to briefly highlight this National Institute of Standards Technology cybersecurity framework layers. This states that a sound cybersecurity strategy combines multiple layers of security on the reasonable assumption that if one layer fails, then at least there are subsequent sort of processes, systems, and tools to thwart a breach attack. And this NIST model is actually one of the most recognized cybersecurity frameworks, and it has those 5 layers of protection. So first of all, you identify the threat, the cyber risk, the attackers, the critical assets, the stakeholders, processes, and systems. Where can the attacks come from? How can we protect against those attacks? How can we safeguard the systems and the data and our operational assets and networks? And what barriers do we have to prevent unauthorized entry? And how can we detect, of course, what monitoring system do we have in place to be continuously aware of suspicious activities and behaviors? What systems do we have to detect an unauthorized entry? And of course, how can we respond as well? What mitigation action can we take if we are breached? What's our communication policy, for example, and how can we repair our defenses? And of course, ultimately, how can we recover as well and get back to standard operating processes? Now, I think one of the key things here, of course, is with these additional reporting requirements and the need to understand the technology framework, there's going to be a need to upskill the directors so that they can understand and analyze and challenge the reporting that they receive from senior management. And I think few boards have really taken the leap to encourage digital leadership into the board structure and capability profile. And I think many boards are still flying blind on this issue. So I think the first challenge is to change the perception that, the technology really plays a critical role in our operations. And it's not just about cybersecurity, but it's actually embracing technology as a sustainable, in a sustainable IT governance framework that supports innovation. And we've discussed a few companies that failed to innovate and were overtaken by their markets and competitors. And so it's important, I think, when we're recruiting new directors to look for technical expertise and understanding to broaden the skill base of the board around technology. And more boards are looking for former chief technology officers, chief information officers that can act as a sort of IT champion or expert, and they can challenge management on those technology issues. Because regular reporting, as we mentioned, is important, and it will naturally improve the skills of the board through discussion. And that should also be combined with a process, as we mentioned here on the slide, of continuing education as well. So some of the key board questions I've highlighted here. What does the organization's cybersecurity framework look like? How does management identify, assess, prioritize, and report on cybersecurity risk? How can we gain independent assurance? And has the organization assessed the types of attackers that could compromise the organization and how they could actually get into the organization? These are key board questions. And again, we also need to think about what are our most valuable digital and physical assets. Where are the key points of vulnerability, and how can we detect an attack? What systems do we have in place to respond and recover? How are we communicating with the outside world as well? And what's our cyber insurance strategy? So, no one expects the board to be experts in IT and digital leadership, but they do need to know enough to ask the right questions and to understand and probe the answers that they've been given by senior management in the same way that they would probe financial statements or risk indicators and other issues such as sustainability. And so some of these key questions, I think, will help to address that oversight function for the board. The main function of these questions is for the board to get comfort that the organisation is proactive, has a robust IT governance framework that includes a policy around cybersecurity, and it's strengthened by the technical defences such as the firewalls to prevent unauthorised access. At my recent employer, the bank in the Middle East, Arab Bank, we had a robust policy around passwords, bring your own devices, and preventing malware being introduced. For example, any unauthorized USB keys were not allowed to be placed in any computer or laptop that was linked to the servers. And so these questions highlight the preventative mechanisms, including an assessment of the most valuable digital assets, such as customer databases, but also an assessment of the potential vulnerabilities. And it also raises questions around the organisation's response if and when a breach occurs. So these are key things that the board can really do to fulfil their oversight function. Okay, with that, I'm now going to pass you to Camillo, who will talk to you about cyber risk insurance. Camillo, over to you.
Sounds good. Thank you, Paul. And I want to make sure everybody, well, can you tell me if you hear me properly?
I can hear you. And
yep, sounds good, Camillo.
Excellent. And just one thing, I know that time is of the essence, and we did want to have a question period, but given the time, if we do want to pose some questions, and I think, Paul, you alluded to this earlier, but there's the chat box below, so we can put in any questions there. If we get some time, we might be able to answer those. And if not, what we can do is maybe provide answers offline or through emails. We'll be able to organize ourselves with Paul to provide you with those. So to continue on Paul's last slide regarding board questions, and more precisely, if things go wrong, are we insured? That's probably a question that may come around. So I'd like to provide a practical guide that boards can get from our webinars today and break the topic of cyber risk insurance into the 6 sections you see in the slide right there. So the role of risk management sometimes is something that is central, because we want to make sure that that's just more of a coordination within the whole process, but I'll touch into that a little bit more. I'll go into the standard coverages as well, with the journey of the cyber risk insurance being a long one. So I want to touch on that as well. Cyber risk assessment, and the score, and going to the market. So the role of risk management within cyber risk insurance is one that can be dictated, or the board can explain it as something that we need to coordinate the risk financing of cyber risk security using and making sure that is no longer just the CFO that needs to, the CFO or the treasurer that needs to dictate this. It's more of a team effort. So risk management can help, and sometimes depending on entities, if it's a smaller entity or a bigger one, you may have a risk manager in place. You might just have the CFO taking care of this. So it's good to identify within the structure or the corporate governance who may be taking that role. So on the next slide, I'll get into the standard cyber coverages. So before touching on the journey of cyber insurance, of obtaining proper risk financing, I think it's important to identify what can be transferred to the insurance carriers and what needs to be held within the organization. So the standard coverages are provided by cyber risk insurance are the ones you see there on the slide. Under operational risk, we have business interruption resulting from a network security failure. System failure then expands coverage trigger for business interruption to include any system failure within the organization. Dependent business interruption is coverage for loss of income that may be caused by a third party due to their own network failures. And then others are the cyber extortion and digital asset restoration are other examples of operational risk coverages. Under privacy and network security risk, coverage is all the liability that comes with this this type of exposure. So defense costs and damages suffered by third parties from our own organization's failure to protect data. That's the type of coverage you may get. And then other coverages include fines and penalties, as well as breach event expenses. We'll go on to the next slide into the cyber risk insurance journey. Well, this, this journey is not a short one by any means. So if the board is starting to ask these questions, we have to be ready to understand that the risk may be managed, but for the risk to be insured or financed, it is a long one. So we need to start, understanding where it starts and how long it takes to get someone to finance our risk. So obtaining coverage is no longer filling out a broker application, and underwriters will rush in to get our premiums in buying our cyber insurance risk. So the complexity of underwriting, recent high volume of claims, as well as increasingly new types of attacks have made insurers more and more worried. So I think it's important for boards to understand that. It's a journey that must be undertaken by companies of all industries. So like Paul mentioned, the high publicized attack of Target is no longer retailers and banking institutions that are getting targeted. But it would be anybody in a lot of small to large companies, like Paul had mentioned previously. The journey includes the understanding and backing of the board, execution of the CIO and their team, along with others within the organization. Like I mentioned before, it's a team effort. So the IT owns the risk, and they're the risk control or the risk managers of that risk. Legal is involved in the contractual relationship with retainers and IT consultants, as well as others. Communications departments need to establish protocols in case of a breach and should be involved early in the process. And finance will help understand the corporation's risk appetite as to when establishing deductibles and limits, and should be part of the decision as the premiums to be paid and how much that cost is going to impact the corporation. So I'm going to jump right into the risk assessment. Paul, before you mentioned, right, boards sometimes have enough knowledge, but maybe sometimes not enough. I know in conversations in my previous experience in my previous company, a lot of people would say, we have comments like, we have our stuff on Amazon cloud servers, and we did that to be more secure, for example, and we should be okay. Well, that's when I say the risk assessment is extremely important to understand the very details that this risk really carries. So it's not as simple as where our stuff is being stored. There's many aspects that we should be measuring. So as is often the case in risk management, and as we have seen in the DAP course, risk management always involves the risk assessment. So before going out and approaching the insurance market to get a cyber risk insurance policy, there are many internal questions that need to be answered. And a policy is not a simple off-the-shelf document that will protect us instantly. So an organization must understand its own risks and where in the maturity graph are we located. So there are various ways that this can be accomplished. But regardless, if we attempt to do this on our own or through an insurance broker or through a consultant, the more detail and the more objective, the better the result. And those conversations need to take place between the broker and the CIO to be able to know that they're on the same page and that the application or the risk assessment truly identifies the risk within the organization. And then the domains that are looked into within the assessment touch on the ones you see right here: data security, access control, network security, application security, third-party and business resilience. And this is only to name a few. We'll go on to the next risk because I want to talk about what comes out of a risk assessment. And this is, I call it the score, but it's really the risk maturity. With this, sometimes the board could ask if this has been done, and the board would be very well prepared with this document to understand where we sit. So the score will be able to show the organization is where it's placed in the security maturity cycle, and be able to benchmark itself with peers if the assessment is done through an institution that has the capabilities to compare the corporation with others. The scorecard, as you see it there, identifies the position of the company along the maturity scorecard, and one being initial stages, number two being the basic cybersecurity in place, three being managed, and four being advanced. So more importantly, after assessing the risk, quick wins will be identified, as well as assist the organization to execute strategies to empower improvement within. So the assessment not only serves us being able to go to market, but it also helps internally to know where we can improve on our risk itself. So let's see here. I'm going to go into, going to market, the next slide. Thank you, Paul. The aforementioned assessment will give rise to an underwriting report that will be both objective and complete. Once the insurers have learned about the risk within the business, a meeting with the markets is beneficiary to ensure the best fit, as well as to ensure that the services provided within a policy are well explained. Some purchase an insurance policy only to benefit from the incident response provider. So this is an important aspect that I want to bring on to today's webinar. Is a lot of the times we want to buy an insurance policy to make sure we have money to cover for the risk and the impact it may have on the financial statements. But it's good to know that these policies do bring in services within. So the first step may be to get an insurance policy with not a lot of limit, but ensure you get all the services within. So legal, computer experts and forensics, public relations, notification services, and crisis communications. No one wants to be looking for these services as soon as a cyber attack takes place. So we want to be extremely proactive as events are more and more frequent. To accompany one of Paul's comments, or actually what we actually touched on earlier, it seems as though it's more and more, it's not if, but when. So I thought the following quotes on cybersecurity could serve as nice takeaways. I think it takes 20 years to build a reputation, in a few minutes of a cyber incident to ruin it. It's happened to a lot of the examples that Paul provided. And I also think the next one, as cybersecurity leaders, we have to create a message of influence, because security is a culture, and you need the business to take place and be part of that security culture as well. That's how you strengthen the knowledge within, and to be able to better protect the corporation going forward. So, Paul?
Thank you very much, Camilo. And just to highlight the point you made as well, that we should have some time for questions if everyone is available still to raise a few questions. I'm going to stop sharing my screen now, and I'm going to go to the chat function. I don't know if we have any other questions in the chat function, and we can see if we have any remaining questions. Let's have a look. Otherwise, if anyone has any particular questions, I'm going to, you can unmute yourself. So if anyone has any questions raised with anything that I've said or Camilo has said today, I'm happy to take any final questions before we run out of time. Otherwise, as Camilo mentioned, we're certainly happy to take any questions offline as well. Does anyone have any questions at all on what we've heard today? It's a fascinating subject area. It's one I think that is so much need for development and really for the boards to upskill themselves. I think that's a key principle around this, because we as governance professionals, we need to make sure that our board members understand to ask the right questions, not for them to be cybersecurity IT experts. That's not the function here, but there needs to be a skill set on the board. And I think one of the key things for me is when I look at a skills matrix, is good to see what level of skill is actually on the board and where there's gaps in technology knowledge, for example.
I see, Paul. Yeah, we have a few questions. Sorry, go ahead, Dora.
No, it was Janet. I was just going to ask, how much do cyber risk insurance policies cost in today's market, on average?
On average, okay. Well, it's a good question, and that today it all depends on going back to that risk. Depending on the level of risk and within the risk maturity where we are set, underwriters take that information and then they have a way of saying, depending on the industry and depending on the risk, how to be able to price that. And then it all depends a lot also on how much we want to retain in terms of deductible, and as well to be able to ask for limits. So like I said before, if we want to have a lower limit and just take advantage of the services, it will be less and not expensive, not as expensive as if we want to go for a higher limit to protect ourselves from an actual event. So to give ballpark figures, depending on the industry, it could range anywhere from 50,000, depending on the size of the enterprise, to 250,000 or more, depending if we want more limits and lower deductibles.
It's 1:31 and we promised that we would end. So I think, Janet, what we can do is you can thank the speakers, and if anybody has questions, if Paul and Camilo have time to stay on, you're welcome to stay on for a few minutes.
For sure.
Yeah, that's perfect. So I would just like to thank Paul and Camilo for a very, very interesting and thought-provoking session. Being a graduate of CGI's International Qualifying Program and the Director's Accreditation Program, the programs that Dora mentioned in her introduction, they've certainly benefited me as a corporate secretary, and these professional development sessions are so beneficial to make sure that I keep up to date and that I bring the right information to my board. So I want to thank you all for your participation today and taking the time out of your busy schedules. And I certainly hope that we will see you again in the future. And again, many thanks to Paul and Camille.
Thank you.
So if people have questions, feel free. And Paul, I don't know if you've got 10 minutes or so.
Oh, absolutely. Happy to answer any questions.
I just have one more maybe. So you were saying, Camille, that it's a long process and it takes a lot of work. So when you say that, would you say on average, like how long, if a company doesn't have cybersecurity insurance, from risk assessment to finish, how long would you say that process is if you're planning to do that?
Yeah, and going into one of my slides, if everyone is on board from the very get-go, and I think that's the important portion. If there's a directive and they need to, that's what management needs to take on, involving everybody. The assessments can be very detailed, so that takes, I would say, anywhere between a month to 2 months to properly go through it and have something hard, and then afterwards maybe another month to be able to have the application and the market respond. So on both sides, if internally you're able to complete that properly and the market can respond in due time, I'd say between that time, it could be an effort that could take 2 to 3 months to be done, the shortest. And the longest, if any of those two lag, so if you have anything internally that delays that, or anything on the other side between broker and underwriters that delays that too, it could go to 6 months as well, or longer.
Thank you. That's great information.
And that's why I said the journey. It's a journey, and it tends to be long rather than short. And if we cannot turn around and get a policy within weeks, in this case.
And I just wanted to highlight as well some of the great comments in our chat function, which you may or may not have had a chance to to view. I just had the opportunity to review the chat function post my presentation. But I think that some of these points here is really, really good points, and they reinforce some of the key messages. I think is that you know, cybersecurity is a large risk to organizations. How can we say that it's just management's problem? You know, it's a huge importance to the board and their key responsibilities. Cybersecurity will be one of the top 10 risks of any organization, and the board cannot ever say that it's with management. And you don't need to be an expert to know that cybersecurity is risk number one. It's a complex decision. You don't want to underfund cybersecurity resources just because you have insurance. It needs to be a key balance, really. And so all of these points are really key. And I think that it underpins the central function of the board to exercise proper oversight. And as I say, I can't emphasize enough about asking the right questions. That's very, very key to the whole process, and continuing education as well, because of course, you know, it's understanding what's coming down the tracks. It's just not what your organization is dealing with today, but what could happen down the line that could be a huge issue for the organization. So as a board, you need to be forward thinking, and you need to be asking, what is management's preparations for, you know, what could happen to the organization. You've got to look almost into a crystal ball, but it is a necessary function of the board. So yeah, some great points made in the chat function, and thanks very much everyone for that. Any final points, Dora?
Not from my end. If there are no further questions, then I think we can thank everyone, and hopefully we'll see you again at some of our other online sessions, and we have your emails, and we'll make sure we get out to you.
Okay, thanks to everyone for attending and staying the course with me. It's a real pleasure for Camilla and I to present today. So thanks again, everyone, and feel free to raise any questions later on. Thank you.